Hello everyone and welcome back to another episode. We understand that this is dividend season and a lot of persons have been asking me questions like, hey Ruth, how is dividend income tax in Nigeria? Or why is it that when a company declares dividend, I end up getting an amount of money that is reduced from what the company has said that they will pay as dividend on the shares that I'm holding? To understand how dividend income is taxed in Nigeria, this is just what this video is all about. So stick around, let's dive in. First thing to understand is, what exactly is dividend income? Dividend income is a kind of income that comes to you as a shareholder or a stockholder in a company. Imagine going to buy shares, let's say in MTN, in Airtel, in let's say Access Bank, Fidelity Bank, Dangote Sugar, Dangote Cement, buying shares in any of these companies. You automatically become a shareholder. It doesn't matter the percentage of your holding. It can even just be one share. You're already a shareholder in that company. And dividend income is the kind of income that comes to you when the company makes profit and they decide to map out a portion of their profit, or it can be all of their profit, map out this profit to redistribute to those people that bought their shares, as a way of encouraging people basically to invest in these companies. Now, when this company pay you that amount of money, that is what we know as dividend income. So how exactly is dividend income taxed in Nigeria? In Nigeria, dividend income is taxed by way of withholding tax. Withholding tax is the kind of tax that is deducted as source. So it means that when the company is going to pay you this amount of money, withholding tax will be deducted by the paying company before the money even gets to your own account or even gets to your hand. Now, what's the rate at which dividend income is taxed? The rate at which this withholding tax is applied in Nigeria is 10%. And that 10% applies across board. It doesn't matter whether you are an individual, a company, a resident, or a non-resident. The rate is 10% across board. So when as a shareholder, you are a shareholder company, or you are a shareholder individual, or you are a shareholder resident person, or you're a shareholder non-resident person, before the Nigerian company pays you dividend, they must have to withhold 10% of the total amount of your expected dividend and pay you 90%. So that remaining 10% that is withheld is remitted by the company, the paying company, to the relevant tax authority. So when next you receive your dividend, you don't need to panic and be like, oh, this company wants to scam me. The company is not scamming you. The company is just withholding the 10% that the law has mandated it to withhold and paying you over the balance. And the next question I hear people ask when I tell them about the whole way that dividend income is taxed in Nigeria is, okay, what then happens to the 90% that I've received? Am I supposed to still pay another tax on this 90%? And the simple answer is no. When you receive your dividend income in Nigeria, it's called a franked investment income. And franked investment income is the kind of income that tax has already been deducted from source, and you're receiving the remaining percentage of it. You don't have any further tax obligation. So when your dividend income comes in, you just have to enjoy your whole 90%, and nobody's coming to knock at your door and say, oh, bring any further tax on this money, right? So dividend income is just taxed by way of withholding tax, deducted as source by the paying company. You receive at the rate of 10%, you receive 90% as a shareholder, and you get to enjoy. You get to party, you get to do whatever you want to do with your remaining 90%. So let's just make it very practical so you understand what we're talking about. Imagine MTN has declared dividend and say, oh, we're going to pay our shareholders, let's say 100 naira per share, right? And let's say you're holding like 10 MTN shares. I know you should hold more than that, but I'm just giving an example. You're holding 10 MTN shares, and you know that 100 naira times the 10 MTN shares you're holding, you're ordinarily expecting to get 1,000 naira from MTN. Now, MTN is mandated by law to withhold 10%. So 10% of the 1,000 in this case will be 100 naira. So MTN holds back 100 naira and pays you 900 naira. So you receive your 900 naira as franked investment income, and you get to enjoy that all alone, right? I hope you've got value from this video. You've understood how dividend income is taxed in Nigeria. You've understood that dividend income, when it comes in, it becomes franked investment and you don't have to pay any further tax. Thank you for following us to the end, and don't forget to like, comment, and subscribe to this channel so you don't miss out on all our exciting videos that we're going to bring your way on tax and finance. I remain Ruth, the founder of Tax Mastery with Ruth. and we talk about everything tax, finance in this channel. So, till I see you again, bye!